Hello again, my Teaserking family. Sorry, I hit some button and says cancel or leave, and I hit cancel and it kicked out. I hate these buttons on this thing. Anyway, so I apologize for that. So in the middle, we're talking about paper gold, I believe, and so paper gold is just simply the derivatives printed because they don't want you out of the banking system or Wall Street. So they keep the price down, and then the inflection is, well, gold doesn't have a value. It doesn't really go up. I don't want to buy it because it won't. I can't get rich off of it. I can't go from 2,000 to 60,000 like I can in Bitcoin or Microsoft or one of these. And I don't know what's going on. So I'm basically just going to try to get into, I'm going to try to get into something where I can make money by doing nothing like Madoff. So I don't want to buy gold. It doesn't move up. Well, gold does move up and will move up once we get rid of these derivatives. So what JP Morgan does is the guys do derivatives and they sell like 10,000 ounces of gold, even though they don't have it, and their own guy buys it. So they're buying and selling to themselves, and it's a short, and then it keeps the price of gold down. So it's all fantasy. It has got nothing to do with somebody selling gold or the demand not being there. It's all bullshit. So people don't understand it's bullshit. They think it's a real supply and demand. It's not. It's just a derivative paper gold. You don't want to be in ETFs because there's no physical gold there. And when it goes go high and you're going to say, give me my gold, they're going to say, sorry, there isn't any. Your IRA, you don't want it because that's stock. That's not physical gold. Only thing you can do is buy physical gold. Buy your coins. That's it. That's all you can do. So with that said, you're buying the physical gold, and that's what the price will go. So the 2,000 an ounce paper will go physical, and that'll be it. So as you buy physical, the demand will go up because the dollars will start going out in all these countries. And the only way off the Titanic is to own physical gold, as I said. So if the demand is here, but the price has been price fixed, when COMEX blows up, the price goes all the way to here, which I conservatively say 20,000. Just judging by all the 50 years of keeping the price down and just looking at Coca-Cola now, $3.50 for a 2-liter, going, well, why didn't gold go up, 100% like Coca-Cola did, Oreo cookies? So that's the real thing is when gold goes, once they stop suppressing it, JP Morgan, and now there's Basel III, which says you can only do the derivatives if you have the physical gold. Well, I can't sell $20,000 of ounces of gold that I don't have, can I? So as that happens, you start realizing the price is dropping or it starts going up. The real price starts going up. Then you got BRICS wanting gold-backed currency. They can't have it at 2,000 an ounce. They need it higher because they'd have to print too much money. And since they beat the U.S. in the Ukraine war, they're not afraid of the U.S. See, the U.S. Are really bad people, and they sat there and they killed Saddam Hussein because he came out with gold-backed currency, and then they killed Gaddafi because he came out with gold-backed currency. They don't want to fuck up Wall Street and the banks. They want to keep the paper money. You think they could develop gold investments, right? So that's what's happened, and that's why they want the U.S. to they want to keep in the dollar because there's too much money being made, and they can go print $1 billion. That's the real reason of the Keynesians. They want to be able to be crooks, and they want to print. Let's print $1 billion. Why work for it? So we print $1 billion, put it in our pockets, and off we go. And that's the problem. But you can't print gold. So from the government side, they want you in dollars so they can print it, and they can get all your money from Wall Street and the banks. From the Austrian side, they want gold because you can't print it. You want clean money. And not necessarily we want gold at 50,000 an ounce, but it's certainly going to be there because when the whole world, who's being run by George Soros and the Keynesians, starts blowing up, every country is going to have to run to gold because there's no other safe haven. The Titanic and the whole world is sinking, and the only way out is the gold boat. And then everybody's going to realize that, and their money is worthless, and they're going to run and buy gold. It'll be a frenzy, and the gold price will go up. So that's why we want to be in physical gold and not paper gold. Paper gold is just an algorithm. It's all bullshit, and it'll be beaten once the Russians and BRICS come out with gold-backed currency. They're not going to, because there won't be any more gold left. Everybody's buying it at $2,100 an ounce. That's it. Now, a scam that I'm not sure it was a scam, but people were buying gold at $6,000 with this IRA company, and I don't know that it's the company is doing a Ponzi scheme or anything wrong. I would love to sell my gold for 10 grand. I could put it on eBay for 10 grand. And if somebody bought it, that's their problem. I'm not Ponzi scheming them. I'm just trying to get the real value of gold. So for them to sell it for 6 grand, it's the buyer who's an idiot who bought it for 6, not the guy selling it. You can sell for whatever price, but who in their right mind would spend 6 grand on something you can buy for 2? Only idiots would do that. So there you go. You're welcome to America. Okay. So that's avoid paper gold, avoid ETFs, avoid stocks, avoid the gold IRAs. Just buy the fucking coins, put them in your safe, and just hold on to them and wait for the value to go up. And it will, because you can't print it. Which leads me to what is inflation and the cause and the effect. The cause of inflation is the government printing, or the printing press, central banks, printing the money to zero. So they keep printing and printing and printing the money. You're inflating the supply of the money. That's the cause. That is inflation. It's got nothing to do with prices. You don't see prices going up and saying, oh, there's inflation. You see, well, wait, you just printed $10 trillion. That's the inflation. You've lowered the value of the dollar. That's what inflation is. And the cause is you printed it. And the effect is things cost more only because it takes more dollars to buy something, because your dollars aren't worth as much. So something that would cost you $100 now costs you $120 because it's still only worth the 100. So the 100's not worth as much as it was. As I said, it's only worth 1%. And I don't even think it's worth that. So if you go to buy, golf shoes for $100, then the price went up to $120. Oh, those bastards! They raised the price. They didn't raise the price at all. The value of your dollar went from 100 to 1. Now it takes you $120 to buy the golf shoes. Hence, if you have 300,000 in the bank, you don't have 300,000 anymore. It won't buy you what 300,000 would. Slowly, it went to 200, then to 100. Now it's worth 3,000. So you think you can retire on 300,000 and you don't have a clue. It's not worth 300,000. However, the safety hatches, these idiots with the fake gold price, the paper gold price, are keeping the price of gold at 2,000. As the inflation happens, the value of the gold should be sky high. Silver should be already 1,000 an ounce. But wait a minute, silver's still 25, gold's 2,000. Wait, but we got all this inflation. The money's lost its value. Why isn't gold and silver going up? Because they're manipulated. Oh, I see. So it's not really the market prices of gold and silver. It's some sort of fantasy derivative, algorithms that are bullshit, that are not real. They're fantasy, like a Disney movie. So you now understand that the real price of gold and silver is not what it says. So when you see silver at 25, you know it's 1,000. So when I go to the gold store and I go buy my gold and silver, and I'll buy silver, let's say I buy 10 ounces of silver, it's $250, $25 an ounce. I skip and dance out of the store saying, let's see, it's 1,000 an ounce. I just bought $10,000 worth of silver for $250. I'm doing cartwheels and handstands and dancing on the car, and it's all legal. That was their price. And I go to the guy who owns it. I go, "Do you realize you're selling gold at physical gold at paper prices? Do you understand what you're doing?" And I got to pay the bills. And I'm like, oh my God. So sell other things. Don't sell your gold. Which there's nothing else sells. Now I agree. I have not bought anything out of that store but gold and silver. So in a sense, she's right. But you know, he's caught in the middle. He can't make it 10,000 an ounce because I can go all over I can go on eBay and get it for 2,000 because everybody is falsely under the assumption that the paper price is the real price of gold and silver. And so if you're wise, like the professor, you can get an absolute steal because you know the price is worth a lot more in a normal supply demand world. Like this. If I'm selling this, it's normal supply demand. I'm going to sell you this bottle. You give me the money, you get the bottle. But in derivative land, they're just selling derivatives. They're not selling the physical. So the prices aren't accurate. So you get a nice steal for this money. So keep that in mind. It's the real price is not close to the paper price. So now do you want to talk to me about Bitcoin being, I can make money at Bitcoin, even though I don't know what it is. I don't know why it goes up and down. It's digital. It's not real. I can't hold it. But I can make a fortune in gold and silver once we get rid of the derivatives. How are we going to get rid of the derivatives? They've been there since 1971. This is how. It's called BRICS and Russia and China, who have 100,000 tons of gold. I believe Russia's got 32. China's got 60. So that's roughly 100,000 tons of gold. They're going to come out with gold-backed currencies, a yuan, a ruble, and then a BRICS currency. And so all the people that join BRICS have to have gold. That's what their central banks are buying gold because they're going to need to put up gold to cover their countries, and everything will be this gold-backed ruble. Well, guess what? We need a higher gold price, plus we want a higher gold price, and that's what will happen. And so gold will go much, much higher than 2,000. And with the inflation of printing too much money, inflating the supply of money that's out there, which makes the value less. So as you keep, your money keeps being worth less and less. So the only out is gold and silver. And this is what these people aren't realizing. So as you print it, so nobody realizes they're printing it because you never see the value of the dollar. You see the value of gold at 2,000, but you don't see the value of the dollar, which is zero. Because if they showed it to you, you wouldn't own it. So you got 300 grand in the bank, you got zero, but you have the opportunity of a lifetime. You can still run and buy 150 ounces of gold with your $300,000 at 2,000 an ounce, which as that goes to 20,000 an ounce, you'll be filthy rich. Oh, but gold's not going up. It's never gone up because it's always been price fixed by COMEX, which it's now blowing that up, the BRICS and the Russians. So therefore, you won't be able to use COMEX anymore. Now you're going to get you're going to get a physical price on gold, not a paper derivative price, because that's what Russia and China want. And that's how you survive, as well as make a fortune in something that you can own that nobody can fuck with. You can't get attacked on Wall Street where the guy's got zero. You can never get gold equaling zero. It can only go up. Forget this derivative. Oh, it's down $20. That's bullshit. That's not real. That's as phony as an NFL game. The stuff going down. It doesn't go down. It only goes up. It's not even close to the price. Silver at 25 is a joke. Silver's $1,000 an ounce right now. I mean, well, it's never gone over 50 because it's always been price fixed, right? And then you see the people that tried to corner the silver market didn't buy physical. They bought derivatives. They bought paper. So all they did was print more and more paper to fuck them over. Had they bought physical coins, they could have possibly cornered the market. But you really can't corner a price fixed market by JP Morgan, who can just do derivatives. And they've been prosecuted before for fixing it. And all they do is get a fine. And since they're running the government, what are they going to do? Put themselves in jail? Now, keep in mind, they were behind the Madoff scam. They're behind the gold price fixing scam. They're behind the real estate trust scam. So JP Morgan's a pretty fucking, I think they're mafia because they run it like that. It's absolutely retarded. So keep that in mind also, that this is who we're dealing with. Now, the question I have is, why don't they just buy gold and then let the price of gold go up? They'd make 100 times more than they're going to make in dollars, because like Warren Buffett has $2 billion. It's going to be worth zero, because $2 billion with a value of zero is zero. This is the problem with them. So I'm going to show you a little video that I was just watching. I have no idea who this guy is. Heinrich Zeeberg from the Netherlands. And this is the problem I have with these guys. So we'll listen to it 2 minutes and then I will explain.
What were the indicators that you saw?
Well, one of the foundation for what I do is very deep analysis of the business cycle in a very thorough way, and probably a lot different from what you see with other analysts, and that analysis simply showed me, and it keeps showing me also, that we did not have an economy going into 23, which was actually falling into a recession, even though you had all the negative outcomes of what was an inflation spike caused by an imbalance between the supply and demand, caused by massive stimulus into a supply crisis. Well, then you get an inflation spike, but the economy was not falling into a recession at that point. And actually, that was the point where the economy was overheating, which is not good. So what we saw there was a natural pullback when inflation gets too hot, but that's not what creates a recession in an economy. So my business cycle model did not at that point support any kind of real correction or real, let's call it bear market, because I know we did go down more than what we normally would call a bear market, but still what I saw was that this would be recovered rather fast, because when inflation went back down again, and the imbalances in the supply and demand would be kind of balanced out again, well, then you would also see the economy start to recover, and you would see the markets follow up based on higher.
So what this guy is so fucking clueless, it's scary to even comment on it. So he doesn't know what inflation is. He thinks it went back down. So if inflation is inflating the supply of dollars, which makes the dollars less valuable, how the fuck did inflation go back down? They still printed the dollars. So these are the type of guys I want you to avoid. I would love to debate a guy like this. They're so stupid. Okay. We have been in a recession for 2 years. A recession is a slowdown in the economy. Well, if you raise interest rates and you raise prices, you buy less. That's just normal concept. So if this is $10, I sell 1,000 of them. If I make this $100, I probably sell 10 of them. That's a recession because I sold less because the price was up. That's just normal common sense. So this guy's just fucking clueless. He has no idea what he's talking about. The stock market is going to crash. He's saying it's not going to. The stock market is going to crash because of the inflation. Inflation kills everything because you basically killed the dollar. The dollar has no value. The other part of the market crashing is there's $130 trillion of foreigners holding U.S. assets for safety. But as they realize the dollar's worthless, they're going to sell it. And most of their assets are in the stock market and the housing market. So I got $10 trillion in U.S. stocks, and I find out the dollar is going to zero. I sell them, and I buy something in Hong Kong, Singapore, wherever the fuck I live. So this guy is just out of his, just so clueless. His models, I do a model of the trade cycle, which is totally based on interest rates, based on inflation. I know we're in a recession, and I know the market's going to crash. I've been out of the market for 2 years. And apparently there's 5 or 6 stocks that keep going up. Those are the ones that they're printing to keep going up. So I just don't know what it is. Shubham. Hi, Shubham. If I get a chance to work for you as a thumbnail designer and video editor, y'all have to email me and talk to me after. I have no idea. So what you have is just send me an email. My email's on my website. So what you have is he doesn't know what he's talking about, but people listen to him. Right? Oh, he must know because I don't know. But if this guy from the Netherlands says this is what's going, oh, the market's not going to crash. Okay, I'll believe him. You don't understand, and he doesn't understand what inflation is. There's no way the recession's over. There's no way the inflation is dropped. How do you figure the inflation is dropped? Do you know what inflation is? And he doesn't. That's the problem. He doesn't know what inflation is. So he doesn't know, he thinks it dropped because the government said so. And unless the government is stone cold Steve Austin, then they don't know. The inflation, they're trying to sell you that inflation's down because this is an election year. Look, the economy's strong. Bullshit, it's strong. You're inflated the fuck out of the money. Interest rates are high, going higher. The Fed cannot lower interest rates. If they do, it'll be very short. But they've already fucked the economy enough. So when you make things more expensive, you cause a recession, and it's been more expensive for 2 years now. As you started raising interest rates, you have caused a recession, and that's really where you're at. So keep that in mind. You want to. So the cause of the inflation is inflating the supply of the money. The effect is prices seem to be going up, but it's the dollar losing value. So as you print more dollars, the value of the dollar drops. So everything else, it costs more to buy because the dollar isn't worth as much. So if I have a €5 and I keep printing it, well, you might as well say this is a €1 because the €5 has lost its value. It's only worth €1 now. So now it still costs €5 to buy something. It's not, the price didn't go up. The value of the euro went down, or the dollar, or whatever you're looking at. And that's really the problem. And this is why you buy gold, because the value of the gold can never go down. Gold is your best out and your only out, and you're going to make a fortune on it. And I know, well, silver's never been over 50, but it's always been manipulated. And by these algorithms and by these selling shorts, only now they changed the laws and said, well, with Basel III, you got to have physical. So you can't just do a derivative without the physical. So yeah, their brother buys it from them, but it's basically the same bullshit. They're just doing it, but eventually the Russians and Chinese come on in and take it over. And then every ounce that they try to sell at this $2,000, all this game, the Russians and Chinese buy it. And then when they run out of gold, then what are they going to do? You run out of gold, that kills it. So anyway, that's what's happening. So a guy like this is just full of shit. Market crash will be worse than 1929 is the headline, but I don't know. I never got there. All right. So now we got to listen to Mark McGuire.
My friends laughed at me when I told them how I'm consistently making $1,000 to $1,500 a day in crypto. But when I showed them, they'll come at will increasingly limit the official dollar gold interventions, which can only be generated inside the only global exchange that is not yet Basel III compliant. The COMEX gold price suppression tool will increasingly be pushing on a string in 2024. Every other gold market exchange that is operated by liquidity providers who are literally NSFR physically compliant. And these non-US jurisdictional physically settled exchanges are increasingly cognizant of the fact that these synthetic US actors cannot really wag the paper market tail in excess of what can be laid off against the legacy non-sticky CTAs. Now, this equation is visible and it's become arbitrable. Every first-tier liquidity provider exposed to the strong demand physical markets, underpinned by global central bank demand, are now capitalizing on these synthetic discounts.
Well, Andrew, I can remember.
So what he's saying is COMEX is ending, and there goes the price fixing, and there goes the low gold price. So I tell you to buy gold now because you're not going to be able to afford it at 10,000 ounce. Now, do I know it's going to 10,000? Yeah, it's like the Titanic. The Titanic is going to sink. The dollar is going to sink, and gold will go up. So we know all that. It's not an opinion. It's not like, well, I think my charts are saying this. There's no question it has to, because the dollar's going out, because they're inflating the money, which means they're inflating the supply and printing it. And as you keep printing it, it goes to zero. That's a fact, Jack. So we know all that. There's no argument there. The Keynesians can cry all they want, but they don't want gold. That's too bad. That's the only out, and you need to be in it. In a worst case, nothing happens, and then you go back to the coin store and you give him your gold and he gives you your money back. No harm, no foul. It's the one asset that he'll give you your money back in 2 seconds. Oh, yeah, you bought gold from me. Oh, you want your money back? Here you go. And whatever the spot is at that day. So people that are worried, like, oh, I'll lose my 300 grand if I buy 150 ounces. No, you won't. And you might make some money in the fact that the gold price will go up. So I was listening. I think there's one more market. Yeah, let me see.
It's been a year now, but back in the first episode of Life in the Vault in 2023, 1 year ago, you brought up just as Basel III regulations took off, and we spoke about this on several episodes of Life in the Vault throughout 2023. You predicted that the gold trading in the low 18, it was about 1800s, low 1800s, but you projected that gold would close well above 2000 before the end of 2023. Now, from what we're discussing ahead of this episode, you're looking for much higher prices in 2024. Can you step through this process, please?
Yeah, Shane, and it's really worth stepping through this. With spot gold opening up at, actually it was 1824 was the, of course these things are burned in your mind because as we move into a new year, you want to see where we're opening and really what we're projecting to be where we would be going. And we'll be looking at that again for 2024. But on the it was at 1824 on the first trading day of 2023. Now, Basel III NSFR compliance became mandatory on that very same date. Now, this meant that for the first time in history, the liquidity providers operating in the global foreign exchange markets were forced to back their spot gold offerings one-to-one backed by physical gold. Now, huge difference. The deliberately unreported 2023 physical gold compliance changed the gold price suppression game as gold began to be sought by central banks, sovereigns, and institutional traders seeking an alternative first-tier asset class that directly competes with U.S. treasuries.
So they want to get off the Titanic, but they don't know what to get into. Now they're seeing, oh, there's a gold boat over there. So as they want to get out of the Titanic or the U.S. dollar, they're all running into gold. All the central banks, everybody on the boat is realizing I can be safe if I buy gold. As I said, that's the competition for the dollar, not the other dollars. It's every dollar in the world will collapse. So you either get into gold ahead of the crowd because everybody in the world is going to have to get into gold because there's no other way out. And that's the whole point. So you buy it now because when it hits 20 grand, can you afford it? And that's why silver will go up. People won't, and then they'll all start buying silver.
Now, despite a year of official pushbacks, right on cue, just as we expected, gold finished strongly above $2,000, fixing at spot $2,078.40. Now, that was $254, over $254 higher than the 2023 open. Now in 2024, and this is the reason we're going through this, well established. I mean, Basel III NSFR compliance is now locked in and fully complied. And it's underpinning this 10 times larger the spot gold markets. And gold, having been reclassified as real money, that the real money it is, provides every other global central bank and sovereign entity a perfect, live, tradable foreign exchange de-dollarization instrument. And this is going to be the story of 2024. And let's kind of look why. Every global South central bank, bar none, as well as European and Asian central banks, are positioning to revalue gold. We'll look closer at the process as the weeks play on, but one thing is clear. As it was at the commencement of 2023, really, that in spite of official gold market interventions against the dollar, gold would have to be revalued literally hundreds of dollars higher. And now it's inevitable that by the fourth quarter of 2024, spot gold will be over $2,500. And most of the same liquidity providers that predicted over 2,000 spot for the end of 2023 are now gravitating closer to $3,000 per ounce.
So there you go. It's at $2,000. They're going to get rid of COMEX, and now they're all saying should be 3,000 at the lowest, probably higher. And that's my guess is it'll be 10 grand. Because once people realize gold, like people, when I go to the coin store, the guy asked me, how come nobody buys when the price goes down and they all come in and buy when the price goes up? I go, because they don't know what they're doing. And if they see it going up, they don't want to get caught behind. Well, what are they going to do when it hits 3 grand? You're going to have lines around the block to buy gold because they're going to realize they've been had. And once people realize they've been fucked, then it really, so it's not going to stop because they're going to go to 3 to 5 to 10. And once silver people realize it's 50, it's 100, then it goes to 500 to 1,000. And people will want to buy gold but can't afford it. Gold goes to 10 grand. They can't afford it, but silver's sitting there at 50, 60, $100. They start buying that, making that price go up. So don't kid yourself. Don't be stupid. Just because what you see is not reality, it's what they want you to see. It's Joseph Goebbels with the propaganda. Do you know how it started? Hitler invaded himself. He had his soldiers put on Czechoslovakian uniforms and start shooting at the Nazis, at their own company, at their own team. The Nazis, who knows? It's all a play acting. And then, look, we're being invaded by the Czechs. We got to go to war. That's how Germany started World War II. They shot at each other. So keep that in mind, that it's a lot of propaganda. The government doesn't want you out of dollars, because there goes Wall Street and there goes the hotel. So keep that in mind. The hotel. Keep that in mind that's where it goes. But we know it's going up because of Russia, China, and BRICS, which is new, and the Basel III, which says you must do a derivative. You must have the gold, physical gold, to do it. And that's what they're doing. So those are the two key things you need to understand. So that is your cause and effect of inflation. And why you buy gold is because you can't inflate gold. The supply of gold can never be inflated. It just is whatever comes out of the ground. So it moves up 3,000 tons a year. There's 100,000 tons of demand. All the central banks. How many ounces do you think a central bank buys? I'm sure they buy 10 tons of it. So then, one central bank. So 3,000 tons is not a lot with all the central banks buying it. And so my little ounces doesn't really register, but I think there's a lot more people buying gold than is let on. And it's your out of inflation. That's your safe haven out of it. You can't be Ponzi schemed with gold. Oh, Bitcoin. Oh, this one coin went out. It never existed. Ben Franklin, whatever the guy's name is, scammed everybody. And, there really wasn't anything. So if it's digital, you don't know what you have. It's not, I want to have this in my pocket. I know I got 5. It might not be worth 5, but I know I got it in my pocket. Gold you have. I got it. Nobody can tell me it's worth 0. That's why I keep going to the Attack on Wall Street guy. 60,000 in a real estate trust, and then the guy says it's worth 0. And of course I say, well, if you had 60,000 in gold, it's worth 110,000, because that's what gold's value went. So keep that in mind. Do not look at these charts when the guy says, well, in 2008 it did this. That's because it was still COMEX price fixed. Now you're getting away from price fixed to a real physical market. That's the whole difference. And that's really what you've got to understand. Once we get that, we get 20, 30,000 an ounce till the dollar nobody will want. They'll all want this gold-backed dollar, and then it blows up. And then they come out with a gold-backed dollar. And guess how much the price of gold goes to? And by the way, your gold will still be worth a fortune, and you can get the gold priced in gold, and the Bitcoin goes to 0. Good luck holding on to anything priced in dollars. Now your house will go to 0, but then it'll get revalued in gold. So will your car. You got a Mercedes worth 100 grand, goes to 0, but then it goes and gets priced in gold. Oh, we'll give you 2 ounces of gold for it. Because at that point, gold will be 50, 60,000 an ounce. Well, it won't be 50,000 an ounce. It'll be an ounce will buy you a Mercedes or a house or whatever. So that's where we're headed. So stay safe. I'm going to go do my football now, if you want. So I'm going to do a little bit more of this. I kind of blend everything into my football, and I'm doing 2.5, 3 hours, which exhausts me, and you don't really learn. You catch the football or you catch the economics. So this way, here you want economics, you got it there. And then I'm going to do football. You want football, you got it. So that's basically it. So anyway, thank you. www.Teaserking is my site. It's my football site. But you can get my email and email me there. If there's any topics on economics or finance, Excel you want to talk about, please email me there. You're welcome here. As long as you add value to the class, that's fine. And that's where we're at. So www.teaserking.com. But I have a master's in Austrian economics, which sadly not too many people have. So I'm telling you things maybe 5 or 10 people understand. And I can't see any of these chuckleheads on YouTube get. None of them get it. Especially avoid Peter Schiff. He's trying to sell you gold. He's making it up. He doesn't know what he's talking about. All right. I got to edit the title. I don't know why they limit. Like I can only use 100 keystrokes to it. All right, so I just added V2 to the title because the other one that screwed me up. All right, have a nice day. I'll see you tomorrow or later for football.